Hi, everyone. I'm Hal Levy with PYMNTS.com. I'm joined today by Dave Scola, who is the Chief Executive for the U.S. with Form 3, and we are discussing the idea and the execution of really thinking about reimagining and then revamping payment technology, specifically for FIs, but doing it in a way that meets the demands of a very quickly changing environment. David, welcome. Thank you for having the time with us. We're happy to have you.
No, thanks very much, Hal. Appreciate you having me.
Let's talk a little bit about where you are coming to market and really where you have come from, where you're headed. The company itself is a few years old, but I would suspect to some of our viewers here, it's a little bit of an unknown quantity, a little bit new to them, and you are somewhat new to the U.S. here too. So let's talk a little bit about what's driving you, why payment technology to your own site and claims need to be reimagined. Let's talk a bit about that.
Sure. Yeah, I appreciate the opportunity to give a little bit of background on Form 3. It's hard to believe, but we're coming up on our seventh year. We're almost 600 people in 28 countries, right? So it's quite a big and long-going concern at this stage, although admittedly not as well known in the U.S., and we're rapidly trying to rectify that. But the company was founded in order to really solve a very specific problem, right? Which is all banks need to connect to payment rails across the world. And those payment rails are complex. They require a lot of maintenance. There's constant standards changes. And it really doesn't make a lot of sense for each individual bank to do that on their own. There's no proprietary value in having a different method of connectivity to these rails or doing it yourself, right? So the whole premise of Form 3 is that we effectively outsource that need and that capability to a cloud-based platform that we operate on behalf of our clients. And that platform is a single code base across our entire client base. And we use a single set of APIs to gather the data that we need to generate and move the payments through settlement and then confirmation back to our clients. So that's kind of the basic premise. We are a well-entrenched company in the UK. We currently have about 40% of all the faster payments traffic going through us. We also do BACS there. We also have SEPA capabilities in Europe. And we're now in the US building out our capability around FedNow, TCH/RTP, FedWire, and eventually ACH as well.
Now, you had mentioned a moment ago, really the idea of you've got to be able to link. You've got to do it in a coherent and I would suspect seamless manner. But banks, more recently, fintechs, but banks especially, have connected on a piecemeal basis as time goes on to different systems. That's what they've had to do for a long time. I would suspect there are some pain points that have been showing up more recently, and I'd love you to give us a sense of what some of the technology, maybe the legacy issues that they encounter now. What are the operational challenges that these banks, when they have tried to do it, go it alone, do it all in-house, so to speak? They've done it so far, but now all of a sudden it's an issue. Tell me a bit about that.
Yeah, I think it's a good point, right? There are a lot of legacy solutions out there. There's a lot of proprietary solutions that banks have built themselves. There's some legacy providers. And admittedly, it wasn't a huge problem up until, I would say, 5 or 6 years ago, right? And I think the genesis of that problem is twofold. The first is that their clients, banks' clients, are demanding more and more flexibility and higher levels of service and pushing for higher return rates in their SLAs. And I think as the banks look to address all of that demand, they're looking at a hulking dinosaur of a legacy platform and trying to figure out how the heck they can possibly accommodate that. Um, and I think the second related theme is the rise of real time payments, right? So TCH RTP has been around for a while. FedNow is now launching. Other markets have far more established real time payment capabilities. But as we see the demand for tying into these real time rails, it's putting more and more strain on legacy platforms, particularly the SLAs that are associated with these real-time payments. You need to process most of these in under 10 seconds. And secondarily, the 24/7 aspect of the availability, right? So all of that is confronting banks who are trying to innovate their payment systems in order to create new product, address client demand, and they're having to do it while they're having to try and swap out the jet engines while the plane's in mid-flight, right? And that's where we come in, because we can really work with the banks to say to them, look, we will maintain this last mile connectivity, right? As long as we can get the data we need as you change out the background, whether it's your core banking platform, your lending platform, what have you, as long as you can tie into our APIs, we can guarantee that connectivity to the payment rails. And I think we've gotten a lot of traction with banks because of that ability to really help them start to componentize their banking and payments platforms while being able to leverage a reliable service.
You've given a good sense of the operational issues, the always on, faster, the time duration you've got in which you can make these payments happen. In the background of all this, we can't discuss going to market in different countries without discussing regulatory and compliance issues, right?
Sure.
And no two operational jurisdictions are exactly alike, and they change fairly quickly depending on what's happening in their own um, field where there might be fraud. There are certainly all sorts of considerations in terms of making sure that payments are transparent and certainly quick. Tell us a little bit about the operational, regulatory, and I would suspect even some of the security concerns that are in the background here that maybe banks have yet to be fully equipped to deal with.
Yeah, and there's a ton wrapped up in that. So I guess I'll start with you mentioned standards changes, right? These systems are constantly changing. The payment rails are changing their standards. Everybody seems to be going through a ISO 20022 migration. In the UK, you have faster payments moving to NPA. And that's really, I think, where we shine, right? Is our ability to say, regardless of that downstream change that's happening at the scheme or the payment rail, we can let us solve for that, right? Because as long as the client is able to continue to maintain connectivity through us through the API, we can handle that change management aspect, and we do it on behalf of all of our clients as part of the service, rather than having clients to have to go to their existing provider, request a change, pay additional money for that change, right? It's that is part and parcel of what we do at Form 3 as part of the platform approach. So that's one thing. I think the other key topic you mentioned, yes, I talked about liquidity, I talked about 24/7, but fraud and InfoSec are also massive, massive concerns, particularly with real-time irrevocable payments, right? And I think if you look at how difficult it is just to process the payment within that specified time frame of less than 10 seconds, and add to that the need to do an AML check, right? Do as much fraud prevention checking as you possibly can. Check for funds availability, check if the account on the other end is a valid recipient, right? That's almost impossible in a legacy environment, which again is where we can come in, operating in the cloud. We're able to tie in those capabilities via the API, some of which we provide, some of which we leverage other providers, depending on what the bank prefers. But it allows us to kind of integrate all of those solutions within that payment flow while still being able to meet that SLA. So that is critical. And then lastly, from an InfoSec perspective, we operate across AWS, Google Cloud, and Microsoft Azure, and we do that real time, active, active, active across all three clouds, which is a bit of a belt and suspenders, as we would say. But our clients are really, particularly our UK clients, are really being forced to address single cloud threat risk, right? If everything is on one cloud provider, that cloud provider goes down, there's enormous risk not only to the bank but potentially to the entire payment ecosystem. And we've addressed that by leveraging all three of the major public cloud providers, who in turn invest an enormous amount, more than any single banking institution possibly could, in their InfoSec environments, because that's what they do, right? So I think leveraging the cloud, both for the increased speed, also for the InfoSec environment, also for the scalability, right? As particularly in the US, as we expect instant payments to accelerate. I think all three of those reasons are good justification as to why banks should be, if not at us, at least looking at cloud-based solutions, because I think it is the next step.
Now, you mentioned, banks looking at cloud-based solutions. You've given us a good view of the mechanics of the cloud and why they should be doing this and how it actually works. But it occurred to me that some banks, or at least executives, might be looking at the cloud. The cloud is used so often as a sort of all-encompassing catchphrase, right? It could be
Yeah.
it's like AI. It's everything. It's everything and everywhere all at once. But when we start to think about the cloud, would you say there might be some misconceptions, misperceptions about what the cloud can do? Or even to your point a moment ago, if you have a provider and it goes down, there's a negative chain reaction across the ecosystem. Or is there a reticence for banks to embrace the cloud that needs we'll call it outreach on the part of a firm such as yours to actually educate and do a little bit of proactive hand-holding to get banks to come on board?
Yeah, it's a great question. And honestly, the answer is less and less so as time seems to progress. I think, frankly, if I had gone to a bank 7 years ago and pitched moving their payments to the cloud, I would have been laughed out of the room, right? But I think now we've seen banks and CIOs become increasingly more comfortable with the use of what is effectively just an outsourced technical infrastructure, right? And I think that comfort has come both from experience as they've moved less kind of critical user interfaces and reporting to the cloud, seeing the benefits of it, seeing that it works, seeing that it's stable. I think they're looking to move more and more to the point where we're seeing even core banking systems being migrated to the cloud, which is fantastic. And I think that is it's a much easier conversation to have today, and I expect again that it'll get increasingly easier as time progresses. What I will say, is that the cloud is not the ultimate elixir, right? It reminds me of earlier in my career when the answer to everything was to offshore the operation, right? If you had a problem, you needed to offshore your operation. And what everybody clearly realized, or very quickly realized, was if you offshore a crappy process, you're going to continue to have a crappy process, right? And I think the same is true of the cloud. If you just take legacy software that was intended to operate on premises and then move it to the cloud, you're not going to get the results that you want. You really need to look at your infrastructure from a baseline perspective and work with cloud native technology to make sure you're really reaping the benefits of what the cloud has to offer.
A little bit jumping off of that, let's talk a little bit about APIs, right? Because APIs, if they're utilized fully, can be both a here and now proposition. It can get you where you need to go right now with a little bit of a minimum of friction in the midst. But there's also the possibility of future proofing, APIs
Yes.
give you a channel or a conduit to future-proof whatever's coming down the line. Let's talk about that for a little bit. What is the function of the API in layman terms, if you could give it to us, but also the way it can be really a gateway to modernizing for future use cases that haven't even been realized yet. So tell me about that.
Yeah, it's a good point, right? And I think APIs do allow that future proofing and modernization just because of the flexibility that they offer. Right? So we use a REST-based JSON API, not to get too into the weeds, but with Form 3, it is not, I repeat, not ISO 20022 native, right? But it allows for ISO 20022 um, consistency. And we've done that very intentionally because we're not just solving for 20022, we're solving for all types of traditional kind of payment message types. And that API approach allows us that flexibility to accommodate multiple different, not only ISO 20022, but legacy FAME messaging in the US for Fedwire, or what have you, right? Um, we can accommodate all of those across the existing API. So that's the first thing. Programming against the API is also very straightforward. Our API is publicly available on our website. You can just go to the page right now and access it and play around with it. And that is very different than hard coding a traditional message format, which, once that's coded, it becomes ensconced in the back end programming language of your payment flow, and it's very difficult to change. I think the other and perhaps most important aspect of the API is the ability to integrate with other data providers, right? So we talked about fraud, we talked about AML, OFAC checking, we talk about checking for funds availability, all those things, very difficult to accomplish through traditional messaging types. But with the API, it's much easier to integrate those checks and those microservices into the flow in a way that traditional messaging could never accomplish. So I think your point about future proofing is spot on, right? And we do with banks that are operating kind of in a traditional messaging format. The lift and shift to the API is work, right? And needs to be done. But once you're integrated into that API, you can then access basically the entire suite of services that we offer, whether it's in the US, the UK, Europe, whether it's payment orchestration, whether it's fraud checking. So it's a heavy lift and shift that reaps enormous reward once it's done.
The idea of integration, cross-pollination, and data sharing lends itself to thinking a bit about open source and what it really means. I'm not so sure that there is a widespread knowledge about that as a model here, specifically within financial services. And we hear open everything now, open banking, open source, and people may not be as conversant with that idea. Tell us a little bit about how that is a governing strategy and why it's a good one.
Yeah, it's a good point, right? I think more and more we're talking to CIOs who what they ultimately want to be able to do is pick best of breed components for each of the jobs that they need to accomplish, not just in the payment flow, but within the overarching architectural stack of the bank. And in the past, what you would do would be to go to a single provider and say, I want to buy the entire horizontal from you, right? Whether it's from the client user interface all the way through to the payment settlement. Those days are gone because banks are realizing it doesn't offer them the flexibility that they require in order to adapt and change, and everything requires, a massive implementation just to get the change that they need for their clients through the system. So what we're starting to see is, and really it's the bigger banks who have been at the forefront of this for a while, right? Is they're picking those best of breed components, stitching them together, whether it's via API or within single cloud environments using their proprietary messaging as well. Um, and they're coming up with solutions that are much more readily changeable, right? And they can address the client demand much more easily. So I think the challenge is doing that does require a level of expertise, right? That not every bank has, right? It's much easier to buy the solution in a full package from one provider and install it. But we're starting to really see is ecosystems evolve where um, you have components that have been demonstrated to work well together in other situations, and banks are starting to kind of purchase from those ecosystems. So I think that will continue to be the trend. And we are very much in alignment with that because what we do is very specialized and very important, but it is just one component of the payment flow, right? And we want to just do that one component really, really well, right?
When we th- when we start to think a little bit about where this might be headed, right? When you have a synthesis of the technology, the APIs, the ability to offload what's been a technical heavy lift, right, for the FIs, and really to do this in a simpler and faster way that adapts to changes in financial services. Let's talk a little bit about the ways in which payments as a service might be embraced more fully by the industry. You've said a few times here, it's not just a one size fits all type of thing. Different firms need different services. Different banks may be further along the technology curve than others. Maybe going to market in new jurisdictions where they haven't been before. What is your sense of where payments as a service really starts to evolve? And you can address some of the security concerns here as well, because fraud is on the rise here. But let's talk a little bit about the idea of payments as a service, where we are now, but where we start to head as we have an embrace of faster instant payments, pretty much no matter where you are, but also where banks may be, I'm going to use the old hockey term, skating to where the puck is going.
Yeah.
And not just reacting. So we talk a little bit about payments as a service and where we might head.
Yeah, I think payments as a service will continue to grow just because of a lot of the pressures that we've already discussed, right? Just meeting the needs of creating a real-time payment environment is going to be a massive challenge for most banks. But yet they're going to have to meet that challenge because if they don't, their competition will, and they'll be able to offer a higher level of service to their end clients. So I think we'll continue to see that evolve because of that, also because of the fraud piece. So fraud's an interesting one, right? In the UK, I mentioned we have 40% of all the faster payment traffic there. What that affords us is the ability to apply a level of analysis that no other provider can potentially do in terms of mapping fraud vectors and analyzing what we're seeing across the market, not just at a single institution, and being able to leverage that purview to detect fraudulent activity will be is a massive benefit to the market, and we're looking to apply the same thing to the US now. It's going to be difficult in the US for any single provider to get that level of penetration, but I think you will start to see providers working together as well around fraud analytics because we know fraud's a big deal. Fraud has been a big deal in some of the existing and newer payments ecosystems in the US. We also know that the political environment around that has been increasingly sharply focused on holding the banks responsible for that activity. We've seen it in the UK as well with the new regulation coming in next year that will hold banks more responsible for fraud. And I think the industry is going to have to respond to that pressure. So I'm going a little bit off on a tangent, but back to the point around payments as a service, I think you'll start to see those levels of demand that will need to be that no single institution can solve on its own. They're going to have to rely on specialist providers, and that will be driven not only by the fraud demand, but also by the increasingly technical demands and operational demands of running a real-time payment environment.
Now, for instant payments, which we will be hitting well, we're going to go live in a few months, a few weeks, right? So theoretically, that's going to hit the ground running. I would suspect there'll be some early use cases that may gain traction, others that may wait to be natural add-ons. What are your thoughts about instant payment here in the States, especially for the FIs that you are working with? What are they gearing up for? What do they think might happen more immediately versus what's coming later on?
So the question around FedNow adoption in particular is one that everybody has a view, nobody has an answer, frankly, because I think nobody's sure quite how it will scale. My personal view is that the uptake will be potentially slow over the kind of first 6 months, but we will see a pretty rapid ramp up once banks start to see the benefits that they can offer by using FedNow. And FedNow has been coded to have a huge amount of flexibility in the types of use cases that can be brought to bear against the system. And TCH is adapting as well to allow for more use cases. So I think you'll start to see the government itself via the Treasury start to use FedNow, which will, I think, help push demand or push usage. The retail components and how that it could potentially compete with existing card rails is another interesting use case. I think the person-to-person capabilities of a real-time irrevocable payment are also huge. Some of that is addressed by Zelle, but I think we might start to see some of that traffic move to a FedNow type of environment. And then there's the use cases that we don't even know yet, right? I was talking to a pretty well-known consultant the other day, and it was one of the things that she was quick to tease out is we don't know how these use cases will play out. Nobody expected the Uber use case before Uber, right? And I think there's other examples out there that we'll see over time. But it will be, I think, what we've seen in other markets, particularly in the UK, where we're now seeing some of the traditional ACH traffic be rerouted through real-time payment rails. I think we'll see that over time in the US as well. But the check still won't die. No matter what we do, we still won't take out the check. I don't know what we have to do, but we'll see.
There are some people who are ever hopeful that we'll get there. So I want to thank you for the time. Thank you for a great first conversation, and look forward to hearing more. And we'll do this again.
Terrific. Thanks, Hal. Really appreciate it.
Thank you.